You're welcome to Economy and Politics Show. I'm Ottoabasi Abasiekong. This edition will discuss Nigeria's FX market and the quest for stability. Joining me virtually for this conversation is Mr. Yinka Ogunnubi, the president of the Association of Corporate Treasurers in Nigeria. Mr. Ogunnubi, nice to have you on the show.
Thank you, my brother. Nice to be back.
Thank you. First, let's begin with a great loss to our country, like we've described. Dr. Herbert Wigwe and Mr. Bimbola Agumbanjo. How would you describe their role in shaping the Nigerian business and financial space?
It's a great loss. Those two individuals have helped to shape our financial system journey from when we were still trying to upgrade our banking systems, the capital market, so many things. And it's difficult to have those conversations about how we have evolved without those two gentlemen. It's a great loss. My heartfelt condolence goes to the family of these two gentlemen. I had quite a good relationship with the late Herbert Wigwe, when as far back as when he was deputy managing director of Access Bank. I remember then that even when we had issues that will require us to speak with the top management of Access Bank, he was always a preferred. Because Herbert will look for solutions, and he had a very good personality, and he moved with everybody in the room. Last time I saw him was in December. He was hosting us, for a brief time, and little did I know that was the last time I was seeing him. It's a great loss. My sympathies and condolences to his family and also to the management and members of staff of Access Bank.
Indeed, a great loss, but their memories and, of course, the legacies will remain. Thank you once again, Mr. Ogunnubi. Now, let's go into the conversation. What is your impression on the current foreign exchange reforms so far? And does Nigeria have the ability to sustain a floating FX regime? Remember that the Economic Intelligence Unit said it's not going to be far-fetched. They will have to go back to a fixed float system.
Going towards these reforms, there's been a huge trust deficit between stakeholders in the financial sector, the financial system, and the CBN. And that trust deficit is not in a vacuum. It's because over time, stakeholders have just got they've gone weary of policy positions from CBN that doesn't go anywhere. And so that was one of the initial reactions when we saw that the CBN was starting to do certain things. But I knew differently. I didn't just felt differently. I knew differently because from the position of the ACTN, I'm the president of the ACTN.
Yes.
I realized that there was a difference in the way of approach of this particular CBN administration and the previous one, and I saw that there was a willingness to engage, there was a willingness to listen, and that gave me hope. That just gave me, it didn't entirely remove the trust deficit, but it gave me hope that maybe something's, it's different. And I will say that this is the first time in over 8 years that I will see a coordinated effort by the central bank to put in policies that you can see is going somewhere. And that's what people must realize, that this is not going to be one take and one solution fits all. It's going to be many solutions, and you want to see the level of coordination that is going on, and how that is. And if you look at what they've done so far, you can see that they are going somewhere, and that gives me hope. Whether we're able to sustain this, it's too early to say that. I think that the signs are good. We should just keep observing and seeing what's going on.
And you talked about trust deficit, and one of the areas that economists and analysts have raised that concern has been in the issue of the verified foreign exchange contract backlogs. And of course, last week, the central bank governor told us that they've settled $2.3 billion in terms of FX backlogs. They will clear very soon, $2.2 billion. And amazingly, $2.4 billion was discovered that was not even fitted in, according to the CBN governor. He said that there were issues of invalid import documents and entities that did not exist, amongst other infractions for that $2.4 billion. They had no business going there, because what they inherited was $7 billion, but they had to get the service of Deloitte to audit it, and found out that $2.4 billion wasn't even what was supposed to be involved. So what does this bring to the community of corporate treasurers and the financial market? Does this bring that confidence building that is expected at this time? Does that address the trust deficit you just raised now? Because this is one of the areas that was raised as concerns in the foreign exchange market.
Okay, so I have two reactions to that. One is that it was no surprise to us treasurers that there was that much forward that could not be backed up. I mean, we could see what is going on. I mean, we are more or less like on the front lines of engaging with the bank treasurers. So we saw what was going on, and there was a lot of allocations that were being made without supporting regulatory documents. We knew there were companies who were, I would call them working companies, into the CBN, and were coming out with allocations. And sometimes some of them were coming to corporates and offering to offload those allocations. So we're not surprised that this was going on, but it was obvious that there were, this was how it was. So when the CBN governor said that 2.4 billion of that 7 billion that was touted as being the outstanding was questionable, we're not surprised, and I think what it does is that it helps to be able to build a bit of trust, that they are significantly going to go clear the system. One of the things that you realize is that they cleared 100% of the forwards of certain banks. Okay, so and those were international banks. So banks like Citibank, Standard Chartered, Stanbic had all their FX forwards cleared almost 100%. So it was a bit of a surprise why others. And then when you begin to dig down, you begin to realize the fact that it was because they were very strong on compliance. Those banks were very strong on compliance, and they were not making room for very sharp practices going on. And that tells you that it's a good sign. That's what we want to see going forward. So they either have to go after those companies or those individuals and put some kind of judicial process on them, or they will also have to factor that into their planning and as to the stability of the naira.
Yeah. Now, when for the corporate treasurers, how are you people positioning with this the approach in terms of the reforms and the activities that the CBN is putting in place? Now you can see that according to the CBN governor, the incentive for arbitrage is reduced. I mean, if you look at it now, for example, it can be 1,475 to $1 today. Para market can be 1,000, maybe 500. I mean, the differentials doesn't create that arbitrage, unlike before, where the official rate could be 450. And then the para market could be going almost 900. So someone can take $1 million, and that's about 450 million, and then sell at about $900 million. And of course, you know the differentials. Like you said, some people that are like briefcase companies. So is that, how are you, the corporate treasurer's positioning now, looking at the market? Is that really deepening the confidence, the activities? Do you see much in terms of that trust build-up? Again, I'm bringing this issue of the trust build-up here.
Yeah. I think one thing that corporate treasurers want is stability. They just want stability. If the rate is 1,005, it's 1,005. But let it stay 1,005 for 6 months or 1 year. That's just what we want. A situation where you have this huge arbitrage in between the official and the private market that creates what we call the two-check situation. It doesn't work, for us, because there are so many things that, you're trying to, manage or juggle. There's a compliance subject. There is the, managing your FX risk subject. So you're really looking at how do you make sure that you have consistency and stability across the board. Corporate treasurers now have become very, very important to the organizations, even to board levels. I mean, hardly would you have a corporate treasurer now that is not making presentation to the board on what the FX rate will be. So we are, our input right now is becoming very, very important, and it helps to be able to have that sense of sustainability and stability of the rate, because we can manage the situation where we can predict quite easily where the rates will be in the next 3 months, in the next 6 months, and co. Today,
so you can hedge properly.
Exactly. I mean, the average treasurer has a lot of instruments that you can use to hedge, whether over-the-counter tools or even some natural hedges. But he needs some sense of predictability. He wants to have some things, that he can. He's not a gambler, and sometimes we have been turned into gamblers. People who should just bet. We're just like, betting agents, like just bet that the naira will be this. And you're not a gambler. You're not in that kind of situation. You want to be able to use economic indices, microeconomic indices, to be able to make a prediction of where things will be. And if you don't have that stability within the market, it's going to be problematic. So, yes, the FX rate, the liberalization of the market right now has led to, even though the CBN doesn't call it a devaluation, it's felt like a devaluation. And to be honest with you, for a lot of our members, they felt the impact on their P&L. We must not forget that. It is when you closed in December, you were closing, with official rate at 900 or something, and suddenly in January, end of January, you're looking at 1,400. So the revaluation loss in that goes straight to your P&L, and it will hit a lot of our members, truly. And CBN needs to understand that we are paying the cost for the reforms of the CBN. But regardless of that, okay, fine, let's take the hit. Let's take the hit on our, on our P&L and all that, But let's have stability, because if there's no stability, guess what? Government revenue will be impacted, because at the end of the day, 6 months down the line, when we start to make returns, there will be nothing to give the government. We will all make losses, and then there are no taxes. So there has to be this win-win thing going on, and that's why we also think that the CBN must engage and listen to the corporate treasurers as well.
and all stakeholders. As we wrap up, what do you see as the outlook for the foreign exchange markets, and what should be the next steps? I heard in one of the programs saying you're seeing that semblance of alignment between monetary and fiscal. How should they align to really attract more FX inflows? You hosted your outlook for this year forum, where Dr. Ottoabasi emphasized the need for financialization of assets to attract more liquidity. What's in the horizon?
Well, it's obvious that the CBN is doing everything it can to solve the short-term liquidity issues. And that's why you'll see that everything they've done so far is to try to boost liquidity in the market through ensuring that the banks will have to offload their long positions. We've seen all these efforts in trying to for price discovery of the FX by basically telling the banks that they can buy and sell at whatever price that they get. The change of the methodology of the FMDQ points in that direction, and then the recent one that the removal of the cap on the spread. So you can see that they are doing everything to boost liquidity within the short term. And the reason why I say that within the short term is because the boost of liquidity long term is really increase in production of whatever it is we're producing and exporting to increase that. Mm-hmm. And FDIs, that's the long term whatever, but that's long term, that's not short term. So essentially what they are doing right now in the short term is to be able to boost liquidity in the market and also attract FPIs. Now, on the attraction of the FPIs part of it, that is where I think that there has to be synergy, because as of today, if you factor in inflation and the interest rate, there's a net negative return. So they have to do something on the fiscal side, because when you look at T-bills, for instance, T-bills are still trading at 5% or less or whatever. And that's not in the purview of the CBN. That is the Ministry of Finance. So there has to be some coordination between those two agencies of government, fiscal and monetary policy, to work in tandem to be able to ensure that there's enough in terms of these reforms to boost liquidity in the short term, enough to give us a bridge to when we start to see the inflows for more production of oil. We see what the budget is. The budget is predicated on larger incomes coming from oil. We see that. We see that the production levels are going up. We see that there's a lot of effort going on, and so we think that the CBN is going in the right direction, and it's hopefully, if all this works out as planned, we will have price stability, and then we'll have a stable FS market going forward.
Thank you very much, Mr. Yinka Ogunnubi, the president of the Association of Corporate Treasurers in Nigeria. You've established the fact that, yes, there's been a trust deficit over time in the foreign exchange market management of the Central Bank of Nigeria, but the current central bank leadership is beginning to engage and restore that confidence with some of the reforms we're seeing. And you've also talked about the fact that, yes, though the measures are short-term, the important thing is to boost liquidity, and that there's also need for that coordination between the fiscal and monetary policy. And for me, most importantly, stakeholders like the corporate treasurers need to be very seriously engaged by the central bank and fiscal authorities, just to ensure that, apart from the corporate treasurers, every other stakeholder need to be on the game plan of how the foreign exchange market will impact not just you, but the entire economy. And we hope that next time we have this conversation, we'll be talking about a stable foreign exchange market. But thank you very much once again, Mr. Yinka Ogunnubi, for the time. And we look forward to future interesting engagements.
Thanks for having me.
Thank you. Thank you very much. Thank you. To get further insights on this conversation, you can visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this show. Thank you for watching. I'm Ottoabasi Abasiekong, and bye for now.